Hello everyone and welcome back to Explain the Charts, your go-to channel for no-nonsense technical analysis. Today is September 26th, 2025, and we are breaking down one of the most talked about stocks on the market, Amazon, ticker symbol Amazon. There is a ton of news swirling around the company right now, from regulatory headwinds to long-term growth stories, and the price action is reflecting that uncertainty. First, we'll unpack the major headlines driving the sentiment, and then we'll dive deep into the charts to see what the data is telling us and identify key levels to watch. The biggest story dominating the headlines is the historic $2.5 billion settlement Amazon just made with the Federal Trade Commission. The FTC alleged that the company tricked millions of consumers into signing up for its Prime subscription service and then deliberately made it difficult to cancel. This settlement includes a $1 billion civil penalty and a massive $1.5 billion earmarked for customer refunds. While Amazon has not admitted to any wrongdoing, they have agreed to make their enrollment and cancellation processes more transparent. Naturally, news of a multi-billion-dollar settlement has put significant downward pressure on the stock this week, as we'll see on the charts shortly. However, some analysts are pointing out that this amount, while huge, represents just over 5% of Prime's subscription revenue from last year. They are predicting that this settlement won't make a long-term dent in Prime's market dominance. This creates a classic conflict for investors, a significant negative headline versus fundamentals that may be largely unaffected long-term. On the other side of the coin, the long-term bullish case for Amazon remains compelling. A recent Motley Fool piece highlights two major reasons to be optimistic: their aggressive investment in AI and robotics, and their rapidly improving financials. Amazon's operating income has reportedly exploded from $15 billion to $76 billion on a trailing 12-month basis, driven by high-margin services like AWS and advertising. They are also pushing the envelope with automation, recently expanding their robot fleet to over 1 million units and even testing humanoid robots for delivery. This focus on cutting-edge tech and cost-saving automation is what has many Wall Street analysts predicting earnings growth of around 17% annually. So, we have a clear battleground: short-term regulatory pain versus a long-term story of innovation and profitability. Now, let's see how this narrative is playing out on the charts. Looking at the full daily chart, we can see the broader context of AMZN's performance over the past year and a half. The stock put in an all-time high around the $242 mark back in early February of this year. After that peak, we saw a sharp sell-off down towards the $200 level in late February, followed by a very volatile period in April where it bottomed out near $166. The price then staged an impressive recovery, climbing back up through the summer. It established a recent peak just a few weeks ago in early September, right around the $238 level, failing to reclaim those all-time highs. From that $238 resistance, the stock began to roll over, and that brings us to the recent action. Let's zoom in on the last 2 months to get a clearer picture. You can clearly see the peak at $238 on September 9th, which acted as a powerful resistance level. The sell-off began immediately after, but it truly accelerated this week, right as the FTC settlement news became public. Look at these last 4 candles from September 23rd onward. We see consecutive, decisive red days, with the stock slicing through several potential support areas. The price fell from around $230 down to where it closed yesterday at $218.15. This is a textbook example of the market reacting to negative news, creating fear and driving prices lower. The key question now is whether this selling pressure will continue or if buyers will see this as an opportunity. To understand the current battle, let's switch to the 1-hour chart and look at the past few days. The downtrend is crystal clear on this time frame. We can see a pattern of lower highs and lower lows since the market opened on Monday. The price broke down sharply on Tuesday the 23rd, falling from the $228 area and finding some temporary support around $220. However, that level failed to hold, and yesterday the price made its way down to our current critical area around $218. This $218 level is now the most important short-term support to watch. If sellers break this level with conviction, we could see another leg down. Conversely, if buyers defend this level, we might see the start of a consolidation or a bounce. Now, let's drill down even further to the 15-minute chart, focusing on yesterday's price action. Yesterday, September 25th, the stock opened near $220, but sold off throughout the day. We can see the intense battle that took place when the price first hit the $218 level around 17:45 Universal Time Coordinated. There was an initial bounce, but sellers kept pushing it back down. The last few hours of the session were spent hovering just above this critical line. For day traders, a definitive break below $217.90 with volume could have been a signal to go short. A strong reclaim of the $219 level, on the other hand, might signal a short-term bottom is in and offer a quick long trade. This micro-level price action shows just how important that $218 support zone is right now. Alright, let's pull back to the daily chart to recap and formulate a plan. The news has created a clear short-term bearish trend, but the stock is now sitting on a potentially important support level. Let's outline the key price zones you need to have on your radar. Immediate, critical support is the zone between $218 and $220. If that fails, the next major support level is the low from August, down around $212. Below that, the massive psychological level of $200 comes into play, which also coincides with the support area from the February and March sell-off. To the upside, the first major hurdle is reclaiming the recent breakdown area between $228 and $230. If bulls can push the price back above that, the next target would be the early September high of $238. Beyond that, of course, lies the all-time high around $242. So, what can we expect next? Let's talk about some unbiased possibilities. In the short term, I believe the bearish case has a slightly higher probability, let's say 60% likelihood. The negative news is fresh, and the technical trend is down. If we see the $218 support break decisively, I'd expect a move to test the $212 August low. This scenario is reinforced if the broader market also shows weakness. The short-term bullish case, which I'd place at a 40% likelihood, hinges entirely on the $218 to $220 support zone holding strong. If buyers step in here and we see a strong bounce, it would suggest the bad news is fully priced in. A breakback above $224 would be the first sign of strength, with confirmation above $228. Long term, the picture looks very different. For investors with a multi-year horizon, this regulatory-driven dip could be viewed as a buying opportunity. The fundamental growth drivers from AI, AWS, and improving margins haven't changed because of this one-time fine. Keep a close watch on that $218 level. It will tell us a lot about the market's next immediate move. That's our analysis for Amazon today. What are your thoughts on the stock? Let me know in the comments below. Don't forget to hit the like button and subscribe to Explain the Charts for more in-depth analysis. Thanks for watching and trade safe.